Hi there. Are you able to hear me?
Yeah, hi.
Perfect. Okay. Slowly starting. Good. Good. We're live. How are we today, Vlad?
Very good, very good.
I think this is actually the first time that we're talking properly. I know you're a busy, busy man. I can see people are joining. Comments are starting to roll in. How are we? How are we? Very, very good. Perfect. So, 1601. I guess why don't we slowly get started? Welcome everyone to another wonderful DeFi stream today with Vlad. He will be hosting. He is the DeFi lead at TON Foundation. Um, this is Zenith. This is probably a lot of you guys seeing me for the first time too. So pleasure. Hi. Um, Today we're going to be talking about completing a full DeFi portfolio. Um, you can talk about the agenda a little bit later if you want to, Vlad. But in general, I would like to mention for everybody to remember that we still currently have the T-Book quests that are available for you to claim your T-Book SVTs. This is done within the T-Book app in the Telegram mini apps. That's where you can go. You can open it up. And some of them may include providing liquidity or what else was there? I have them open. So actually, there's about 6 of them right now, right? There is some for Ton Stakers, for BMO, Forever, StoneFi, DDust, and Storm Trade, right? Some of them will require you to provide some liquidity. Some of them will require you to maybe to even do some trading. But this is a really, really good exposure for all of you into DeFi. It's very light. It's nothing too crazy. It is a bit of a learning curve, but I'm sure that most of you will be able to do this. And remember, once you claim these SBTs, there will be an airdrop for those that are holding the SBTs at a later date from each of the projects that are hosting this with us. So I guess for now on, I think it's on to you, Vlad, to start off this this DeFi.
Okay, so thank you so much. Thank you so much for inviting me. And this is really good thing that we did this quest with SBD because we have amazing company to explain to users how it exactly works and what the under the hood. And under the hood is the DeFi, with the best strategy on chain on TON. What we have with the liquid staking derivatives, with farming on the DEXs, and with lending and borrowing. Also with perpetual DEX, which have vaults. And all of that we discussed on our previous stream. I kindly ask you to check it, and there we even did schemes with the mechanics, how it exactly works and how you can start learning what is the liquidity mining, what is the yield farming and on. And all of the streams, this is not a financial advice, guys. This is only an educational purpose, so we are making it to explain you what is crypto and the DeFi about. So today we're going to talk about the portfolio and crypto. And the general idea about the portfolio is to be a small investor or a big investor. So I don't want to evaluate, but is to be an investor. What it means? It means that you are not trying to understand or predict where the price is going to go up or down. You're ready for up and down. And this is the general idea of the investments. So you're not playing the gamble, you're not putting the bets, you already prepared for some price movements, and this is it. So where we like where's the investments came from? All of that is came from the stock market, and on the stock market, I know that we have a funny article and a funny research that listen to it. Only dead investor is most profitable, and that was the research for I didn't remember which company did it, but you can just Google it, like dead investor is most profitable. The idea behind it, that the company takes the analytics for last decade, a half of the decade, and they understand that only those investors who are dead and who cannot do anything with the investments. I mean, they cannot move it, they cannot sell it, they cannot believe in another one Dogecoin and sell the first one and buy another one. They are most profitable. So, and this is the general idea around the investment, because the whole industry in a stock market and a crypto and a DeFi, the industry trying to sell you another amazing opportunity. And with this another and another and another amazing opportunity, you're losing money. And the idea is to create a portfolio and to create the terms or the conditions how you're gonna and what you're gonna do with this portfolio. So what is your behavior to already predict in your portfolio some changes in the prices, for example, the market cycle, and to predict in your portfolio some kind of industries for experiments and some portions of money which you can lose. So maybe it sounds kind of crazy, but I'm gonna show it to you. So I would love to explain it in as most as simplest way as possible. So let's go to the screen sharing.
I would just like to say, guys, if you do have questions, leave them in the comments and we will highlight them. And if you have any questions for Vlad, he'll be able to answer them for you. Just so you guys know, we can see them.
Does it work? We are live.
Yep, it's all perfect. You can see your screen.
Okay, so the whole concept of the portfolio is to have the categories inside of the portfolio. And if you're going to explain it as in as simple as possible way, we just need to have stable coins. We need to have long-term assets. We need to have some assets for the good farming, and we need to have some assets to do the experiments. So what it means and why. The first idea is to have the stable coins and divide all of your categories on two divisions. One division is volatile assets, and another one is volatile is here, and another one is stable. And that's the general idea. So why we need two two departments of your assets? Because we have these market cycles. So, well, you can go to coin market cap and you're gonna open market cap by total value log. You're gonna see this chart, which is starting from 2014, and you're gonna see this three tops. Like this one is not yet, but who knows? Or maybe this is it. Maybe that's what they have in 2024, but this doesn't matter. The matter is that we have this market cycle. And if you check the general trend in each industry, whether it be like medical or tech, you're gonna find the cycles there. So this is the concept behind crypto, which are based on halving, for example, and some historical dates. So what we are deserved this year. So this year we deserved halving. That was the first like a date for the price movement. The second one is ETF, the acceptance of the ETF. And the third one, what we are looking for, is the government election in USA. And each year there was different special dates or special times for the price movements, but it definitely was. And we have like this 4-year market cycle based on the Bitcoin halving. So what it means? It means that if you're going to create a portfolio, it will be good to have more stable coins on the tops in those two parts of the portfolio. So on the tops, we're going to have more stable coins. And after the top, we're going to go down, which means that we didn't lose much because we have most of the portfolio in the categories. Then in the bottom, it's good to have more volatile assets and more crypto, because when it go up, we're gonna earn more. So it's just simple concept. Based on this general idea, we can say that we need not only the categories, we also need the proportion of these categories. So just an example, you need to have good to have like 70% of the stable coins when the market goes up, and 30% of volatile assets when markets going down. And you're gonna choose this proportion by yourself, and this proportion depends on your feelings about the market cycle. So what we think now? Now we are like waiting for the government election, so the government election can change the crypto industry. Maybe China gonna unban the Bitcoin, or in USA we're gonna have more regulated field, or some clearance in the regulation about the crypto, like in Europe with Mika. And that's our next date for the potential price movement. And based on your feelings, you think we are already done in this part of the cycle, so we wouldn't go up, or not, we're not done and we're still bullish, and the price is gonna go up, and the price of the whole crypto. I mean, like, it's not only about the TON, or only about the Bitcoin, or only about the Ethereum. That's the whole crypto in general. So you need to like do the snapshot of your feelings and understand for your especially your side, do I believe or not? Why I believe? Because I know this gonna happen or that gonna happen. And what about the 4-year market cycle? We're on the top, we're not. And then you decide the percentage of your categories. So the general idea is to have at least 2 categories with stable coins and the volatile assets. And the second is to have the percentage of the stable coins and the percentage of the volatile assets. Then we can move forward and expand our volatile assets into different.
Vlad, sorry to interrupt you quickly. There
Yeah,
have
yeah.
been some comments saying that maybe you have lost some of them a little bit, or maybe they found some things confusing. So maybe it's better to give a good explanation of exactly like why you're doing this general overview of the market, and why it is that you're first looking at the market to first understand what you're investing into and what you're trying to hold. Because I think that there's a lot of buzzwords that have been thrown about the halving, the presidential election. A lot of people don't understand that a lot of these things affect how the market moves, and of course, how the market moves and how Bitcoin moves, everything else moves with it, right? So especially when you were talking about the 4-year periods of the halvings, I think a lot of people probably don't even know what the Bitcoin halving is. But I'm not saying that it's something that should be explained. I think this should be for everybody who's listening, for you guys to write down and get out there, maybe do some research to understand what it is that Vlad is talking about, because this is very, very, very important. And you have to understand that we had a Bitcoin halving happen just about 5 months ago. And usually what happens after 5 months after a Bitcoin halving should be happening now soon. And this is why everybody's so bullish. So this type of understanding in the, at least in the blockchain space, is something that's considered, quite simple. If you're an actual DeFi blockchain investor and you want to build your portfolio, these are just some of the simple things that you should know. And this is why Vlad is explaining in this way. But as I said previously, sorry to interrupt. If you guys have your questions, please don't be scared. I'm trying to read all the comments to see if there is any questions for Vlad to answer as well.
So what I can do, I have like more 4 minutes to explain what's behind the 3 categories here, like what it means. And what we can do next, we can do a bit of a live discussion with you and check the comments and negotiate with you also, like what we think about it. So how do you think? Let's do?
Yeah, we can definitely do that. So of course.
Yeah, the final word about this general concept. We're gonna speak more and we're gonna go more about it. But so you need to have like 2 categories for sure, for stables and for volatile assets. And in a volatile assets, we can divide this category into just an example, 3 types. So the first one is a long-term assets. It's what's this about? This is about those type of assets in which you believe more. So that's the assets of layer ones. That's the most powerful and strongest assets for your opinion. Just an example, if we're gonna take some meme coins, the meme coins usually didn't survive during the market cycle. But what survived? TON survived, and the price of the TON and the TON ecosystem are reflected in the TON price. Then the Bitcoin price and the Bitcoin itself, Ethereum itself. We have new L1s also. Then the second category is the good farming. The good farming category, the category of assets in a DeFi, which you can farm and you can be like you can trust the way how you can get this reward. So the good example on the TON ecosystem, if you're gonna go to the DDoS or the StonFi, you're gonna find 3 pools with rewards from the foundation. And there's the pools with TON USDT, TS TON USDT, and this TTON USDT. And we have this farming confirmed until end of the year, and you receive a reward in the native TON. So that's what means like good farming. And then the experiment category is the category for all of the experiments, or we can also say this is the gamble category. So you can divide some part of your volatile assets to do the experiments. So if you believe in the meme coins, if you believe in some fancy tech, or you find some good coin, do not invest all of your money. You already have the category for experiment, and you can use some portion from this category. So if you have the percentage and you already divide the portfolio between the stable coins or stable assets, so and the volatile assets, you may to also choose the percentage inside of your category of volatile assets. So just an example, we may have like 30% of our volatile assets category in the long term, then 30% in the farming, and 30% in experiment. Or if you more conservative, you can put more into long term, less into good farming, and less into experiment. the most fanciest category here is the experiment, and there's most risky category. So it means you have more risks, but you definitely have more rewards. And this is the easiest and the general concept on the portfolio investments and how usually the small VCs or the family offices works. So I would love to do like a small discussion here. And I think my first question then is for you. How many people you know who invest in crypto, like who attaining this approach with the investments, not with the trading, not with this all of the bullish things, who think like investors with the portfolio, with the categories inside?
That's a really good question. To be honest with you, I have a lot of friends in the crypto space and I have a lot of friends who invest as well. But I don't think that they take into consideration exactly what it is. They usually try to invest into projects that that they think are bullish and that they try to make the most amount of return on. However, as you've pointed out here, and I agree with you completely, I think that should be one of the best ways to do it. You should really try to separate your different investments and your different money, what you want to put into, and especially allocate certain percentages to the portfolio as well. But yeah, of course, I have friends, who are investing, who are literally just buying for centralized exchanges and are just holding coins because somebody else has told them to hold it. I have friends who are, who I meet in networking, who are fully into the DeFi space and use decentralized exchanges to buy coins and hold them and also stake them or, provide liquidity. I've met a range of different people and of different investors within the space. But when it comes to, if I was to ask them, like, what percentage of portfolio do you think this is, I don't think they would be saying mostly like, oh, 30%, 100, I know this off the top of my head, they wouldn't. But this way is definitely like, it's a good way to kind of keep yourself safe when it comes to investing into this, because as we know, market volatility within crypto is can be quite large depending on the news, any black swan events, anything that happens. It can be quite volatile. So trying to diversify your portfolio between those type of categories is a really good idea.
So it's for me, that's like a general, I don't know, it's like breathing. So if you are usually, if you're working somewhere, you want to do some savings. So you're receiving salary and you're able to save some money from month to month. And then if you have, I don't know, at least even $1,000, this $1,000 just leave in your bank account. So, or
Well, yeah.
whatever, leave in your crypto account with like USDT if you are having salary in crypto. And here where you usually ask yourself, like, okay, what are you gonna do with that? And to be honest, we don't need like several lives to create a good capital for ourselves when we like getting old or we're gonna have our family or children or we need to like buy a house or something like that. So we need, at least I know it's maybe if I say that that's my looks hard for some young people, but we need at least 10 years to build our like wealth.
Yeah.
And behind this, if you just saving your money with compared to investing money, you can get significantly more. We can even take an example from the stock market, not from the crypto, not from the Bitcoin. So in the stock market, we have all of these companies like Apple and Nvidia, or even S&P 500, and all of these assets are growing from time to time, from time to time. Like each 2 years, each 3 years, you're gonna find yourself with more money than before. And this is the general idea behind it. So in crypto, all of the news, all of the PRs, medias, Telegram channels, um, talking us like invest in this thing or consider this opportunity or buy this meme coin or this is amazing farming strategy. But all of this noise are making you weak regarding your investments and regarding your portfolio. And what we just uncovered, that if you guys gonna have the portfolio with even two categories, the stable coins and the volatile assets, you will be ready for different scenarios. If price goes up, you can sell your volatile assets. If price goes down, you can buy more volatile assets because you have stable coins. And that's how usually the family offices and the venture capital works. They don't predict where the price go. They ready. They only one thing that which they can predict is some kind of portfolio percentage between the stable assets and the volatile assets. So if the venture capital believe and market grow, they have more volatile assets and less stable coin. If they believe that we need to wait and um, there's like was already top of the market, they have more stable assets. And that's the concept which we can follow by ourselves independently. So you don't need to be a family office. You don't need to be a venture capitalist. You even don't need to, I don't know, have a license to trade any stocks or use any financial tools and like the physical stock market. So you're in crypto. You just need your laptop, internet, and knowledge, and that's it. And why we are here to give you a knowledge how it works. So that's from my side. Also, from my friends, honestly, most of my friends are doing gamble. So yeah,
Well, yeah, there
you
is a
know,
lot of people like that.
there's
Yes.
there's even a funny thing when I attend the crypto conferences and I ask people around, do you have some long-term assets? They saying like, no, we have only meme coins.
Well, maybe that is, well, look, it depends what long term is for people, right? Like you mentioned, for a lot of the younger population, like it's me, myself included, you said looking 10 years ahead. We're not used to doing that, right? We've barely been alive for, half that time, especially with a lot of people trying to jump into crypto now because it's, it's hot and it's exciting. But well, and the other thing I would say is in crypto, because things move up and down so fast and things change so quickly that people don't ever tend to look at the long term range of things, and they really should start. And another thing that I do love about crypto and DeFi is that you're not just investing like you do with the S&P 500, like you do with buying stocks, right? You can actually make that crypto work for you in terms of staking, in terms of providing liquidity, doing different things. So if you want to hold something for a longer period of time, like even if it's just USDC, right, which is a stable coin, you could even, it's like I would much rather have $1,000 in USDC than I would have $1,000 in my bank account, because at least I can go and stake this USDC for 4 or 5% APY, to hedge against inflation, instead of just having it sitting in my bank account with inflation growing every single year and actually it's losing value. So that's why I like DeFi and why I like crypto as well.
Agreed with you. So to give a good example for the audience, I would like to continue sharing the screen. And
but as you can see, somebody else did also ask a question about the barbell strategy.
actually, I don't know what means barbell. So if we can
I presume
translate,
that's something for technical analysis, no?
let's see. I know what means the dollar cost average strategy when you're buying time to time on the same amounts.
Oh, when a trader invests long with short-term duration bonds, but does not invest into intermediate duration bonds. Well, the barbell strategy, for some reason, apparently says that it's more focused on bond trading.
Yeah. I see. So that's to be honest, that's not my field of experience with bonds and the stocks.
Well, CoinMarketCap says that in crypto terms, the barbell strategy lets investors invest equally in the highest and lowest risk areas. So more like a 50-50, I would presume.
So it's like I have two categories to invest, for example, and TON, Bitcoin, and Ethereum, and then some meme coins.
Yeah, I mean, I think the whole point is that it's meant to be like a barbell. If you're doing like a push up, and of course each side you have to have an equal weight, otherwise one side falls. So I think that's what it means. So it's like 50% in I guess long term assets and assets that you're really confident are going to do really well, and the other 50% in something that you think might do well or might not do well.
I think we also might have some stable coins during the market volatility and the market cycle, because if we put all our money to one part of the bar with the volatile assets and the another part with the long-term assets, we need.
Okay. Yep. Looks like you need to do a little muting. That's fine.
Yeah, sorry. We need to have kind of stable coins to have more ability to move with the volatile assets and with the long-term assets here. So if we use this strategy, we definitely need to have also some category with stables.
Yeah, that makes a lot of sense, and it's also good for a DCA strategy as well. But I guess that can be done another time.
So hold on, let me move another position.
Whilst you are moving, there was a question earlier that I did forget to ask. I think they asked specifically about TON. So they said, why is there no range for liquidity within TON? So maybe by the time you do sit down, that'll be good to try to answer that question as well.
So, sorry, now it's more better. There's open space here. Okay, so let me continue.
Did you get that question?
Yeah, yes, sorry, say it again.
The question was why there's no range for liquidity in TON.
Why is you mean the range of liquidity is the Uniswap v3?
But that was just the initial question. I presume what they're meant to ask is why is there maybe like not much liquidity within TON? But they said why is there not much range for liquidity within TON? So maybe that means why can TON not potentially get as much liquidity as others? But I guess we can interpret that question in many different ways.
Let's check this question because
yeah, let me just put it up.
Where is it on the screen?
Yeah, there it is. Gafar.
Where there's no. Okay, so if you mean the Uniswap v3 with the ranges of liquidity on the DEXs, we still have our DeFi ecosystem under development, and on this hackathon we have the track especially for the concentrated liquidity market maker, and we're gonna have, of course, the with the ranges of liquidity, but not today, maybe in a couple of months. If I right understand your question. If not, you can ask it again more specific.
Yeah, that makes a lot of sense. At least for me on my side. I think a couple of months down the line, we're going to have a lot more liquidity going through, whether it's decentralized exchanges and centralized exchanges. I think we still need a couple of more bridges. We still need to bring in a lot of people from other blockchains too. There's so much that's happening. I mean, if we look at Solana right now, it's going up through the roof. But if you looked at it back, in the last bull run, it wasn't doing that, right? So the liquidity's shifted there, and the same thing will shift here within time.
So I created a small spreadsheet here to explain why we need these categories and the division and the type of the categories inside. So just to mention an example, if we have these 4 categories like stable coins, long-term assets, some good farming or good altcoins, and some experiment category, we gonna divide it in some percentage of the categories. So example here, like a 70% is going to be in the stable coins and 10% all here. If the crypto going down like in 2018, or if crypto goes up like in 2021, we're gonna have the different results, and that's our framework of profit and loss. So just imagine here, if the crypto is going down, we're gonna have up. Let me know. Hold on.
Are you trying to do the percentages of how much it's gone down by?
Oh, I come back.
Okay.
So
Okay.
if we have, if the crypto goes down like in 2018, we will have with the long-term assets, they may be lower in 3 times. So we see Bitcoin in 60 and we see Bitcoin in 20. And then if the crypto goes up, we may have like 2 times more. The same for the good farming or the good altcoins, but with, of course, more coefficient was going down and the more coefficient was going up, and also the same with the experiment. So this is your like risk and the reward acceptance framework. So if the crypto goes down, you're gonna lose with this percentage 24k. If the crypto goes up, you're gonna earn more 60k. And then if you divide this categories with a different percentage. Like imagine example, we have only 50k in stable coins, and we have like more here and more here. What we see now? We see now that we have uh, more risks and we lose more if the crypto going down, and definitely we can earn more. And this is the general idea which is behind our portfolio and behind the categories. And that's why we need these categories to predict and to be prepared for the price movements. So this is it. And also, like, this is a question for you, Dennis. What do you think about this division of the categories?
Well, it's definitely an interesting division. I guess that division will also change depending on the market, right? So if you are, like you previously said, if we're in those low periods of time where everybody's selling, not everybody's happy with the market, of course you would want to increase that percentage to be a little bit higher from less stable to others. But I get your point in the end. If you were just to split up your portfolio like that and not look at the market at all, if it was to go down, that's how much it will go down by, and that's how much it'll go up by. It's understandable. It makes a lot of sense. It's diversification at its finest. Trying to diversify your risk, right? Because if you were to put all 100% into let's say the experiment, or even 50-50 between long and experiment, you would most likely lose 80 to 90% of your portfolio if the market goes down. But of course, you could potentially make 5, 6, 7x if the market goes up. That's your risk you're willing to take. However, you shouldn't be taking those type of risks, because that's very, very, it's in a word, risky, right? So diversifying your portfolio like that mitigates your risk, but also at the same time, I wouldn't say maximizes your return, but it gives you a good amount of return.
Totally agree. Totally agree. That's very important to understand where you on the market cycle. So another one, what I would love to share is
There was a question asked quickly. I will do this. If you
yeah,
can
yeah.
see this, do you guys happen to have a space to train beginner crypto traders to advanced level? Currently, that's not something that we've planned, but would there be something like that in the works, Vlad?
So we have a lot of communities, and we have our T-book bot to explain how the DeFi works with the quests of the providing liquidity and using DeFi applications. You can start with that, and we are launching these streams especially to give more education and like crypto, about the DeFi, about the investments, about the portfolio and how it works. Uh, be in touch, follow our social media, and watch our streams. We are trying to explain here as much as possible, like to give you more tools. Because with crypto and with DeFi, only one thing what you need is the knowledge, and that's it. With compared to stock market, you don't need to have any licenses. You don't need to deal with any middlemen. So you are directly working with the assets and with the financial tools.
Yeah, that makes a lot of sense. And I mean, also outside of just Vlad, yes, he is a DeFi lead at Tom Foundation. There is a lot of educative content online on YouTube. So, for instance, like you said, right, we don't need a license to trade and do things in crypto. I started off with just watching YouTube videos, trying to find good what are they called? Sorry. Well, good people to watch on YouTube who actually know how to teach, so I can actually understand it. And of course, I'll experiment and trade on my own to get a better understanding of how this works. And this is what I've been doing for the past 4 years, and why I'm able to understand this. But yes, I will look through the questions a little bit more as well, guys. So don't be scared to ask them. We will talk about them, and we'll try to cover as many as possible.
So that's the final thing for me, like the final screen sharing, and then we can dive deep into the questions. So yeah, to cover this idea, like we have the portfolio divided into the categories. We have stablecoin assets, we have volatile assets, we have percentage between the stablecoin and the volatile assets. And inside of the volatile category, we also have some division between the categories based on the percentage. And let's talk about the good farming, because in general, from 2020, we like users of the crypto market, we received another amazing opportunity how we can use our assets. We can put it on farm. So it means we can it's like with houses. If you have a house, you can sell it, of course. You can wait until the price goes up and then you can sell it. Or you can invite some guests, launch account on the Airbnb, and you can receive some money from the rent. And this is the same. So if you have an asset, you can sell it immediately, or you can wait till price goes up and down, or you can put it somewhere, for example, in some DeFi, in some financial tool, to receive additional reward based on these assets. So it, and the simplest way to say, you're putting these assets to work. And the good example, that's our strategy on TON with the liquidity staking, with the lending protocols, with the DEXs, and with the perpetual DEX. So I just want to uncover it and repeat from the previous stream. We have this quest on the T-book where we explain how it works and inviting you to participate, and you receive also the additional reward, not only the reward which is included in these protocols. And all of that is about the strategy. So we have on TON liquid staking protocols like TON stakers and BEMA, all of this in T-book. Just follow T-book quest. So we have this liquid staking derivatives with the TON stakers and BEMA, where you're able to put TON and receive back the liquid staking derivative is T-TON or the TS-TON. And you're already gonna earn some APR, like 3-4%, because you're gonna help validators, and you are stake for the validators, and you receive in the chain emission. Then, if you receive a T-TON and the TS-TON, you're able to put it into the lending protocol, EVA Finance, as a collateral, and you're able to do the borrow with USDT against of this collateral. That's like the strategy extension. That's also some leverage. It's more risky than just holding TON or investing TON, but it also had more rewards. Then, if you receive this USDT as a borrow, you're able to put it on the DEXs. We have now the DDAST and the StonePi, and we have their pools with TS is T-TON plus USDT and TON plus USDT, on which we are given the incentivization till end of the year, so you're able to earn native TON, or you're able to put it into the Storm Trade vaults and earn some trading commissions there. So this is like the most powerful strategy on TON. You can use it in any cases. So you can just participate in the step one with liquidity staking. You can just participate in the lending protocols, or you can just use DEXs, or just storm trade, or you can combine in the full strategy with the extension, but that's of course more risky, because with the lending protocol you may be affected by the liquidation. So what you need to do, you need to do your own research. You need to follow the T-book quest You need to start with a small amounts of money, like $10, understand how it works, and only then put more. So we not advise you to play on the full portfolio. We advise you to firstly educate yourself, understand how it works, and then participate more. So follow our T-book quest, and that's the best strategy on TON right now. And with you, also the big VCs participating in the strategies, and the big liquidity providers and the big whales. Because even on these three pools, on the DDoS and StonFi, we have like $100 million of liquidity on each DEX. So that's that's the general idea.
Yeah, I mean, can you put it back up if that's okay? Just to maybe do some the screen you were just showing. It's a really interesting screen, and it's a very good screen for people to try to understand exactly what it is you have possibility to do with DeFi. Because I wanted to talk to you a little bit more about it, if that's okay. Because as we are going into questions, I guess we can do a bit more open talk about it, especially as that includes the T-book quest, right?
Okay. Sure.
It's just from my understanding, is speaking on behalf of the community, is that a lot of people don't even understand when it comes to what is staking, what is providing liquidity, and why it needs to be done, and why rewards are given back, right? So when I started learning, I dove into DeFi myself like this, and people were telling me go into staking, go into this, but at the same time I didn't understand exactly what it is, right, and why it's being used. And as soon as I started to understand exactly what it is, for me it made a lot more sense, just personally speaking. Like, we've just spoke about staking into liquidity. A lot for everybody that's listening, you should probably go and try to understand what proof of stake blockchains are, and why validating and staking for validators and helping them validate transactions on the blockchain is very important, and how you get those rewards back, and how you earn the APR. And you should know what staking pools are as well, because you can stake, of course, native blockchain tokens, and you can stake other tokens and other pools, right? So for me, when I started to understand exactly why it's there and how it works, I started to understand why I should invest into it. Because we can talk about how they should do this and what steps they should follow, but at the same time, if you guys don't understand what it is and why you're doing it, outside of just making money, it's going to be quite difficult for you guys to understand why you should put your money in there. And I actually wanted to ask you a question. Do we have something similar to Yearn Finance on Tom?
Not yet. We have some projects now in the open league. Let me find it.
So because that would make, of course, investing into DeFi a lot more easier for a lot of people, right?
Yeah.
For people who are listening, yeah, basically it's like a bucket, and they do all of that DeFi investing now. But I showed it on the screen on your behalf. It's just you basically put whichever currency it is they would like into that specific bucket. It's very good when it comes to DeFi. And there is a lot to learn about DeFi. It's very scary, but when you start to understand it, it becomes quite clear, and it becomes very clear to understand why you should be investing into it.
So regarding the open link, we have this DeFi support program with the $100,000 prize pool for the users. And here we have a few protocols which mostly similar to Yearn Finance. As Yearn Finance, that's a yield aggregator where you can put your money, and then their contracts. I don't want to say contracts. So you can put money in some kind of yield from an aggregator.
I think they call it buckets.
Right? It's kind of they gonna automatically decide where is the higher APR, and they're gonna invest then. And there's like automated investments based on the APR and some integrated market opportunities. So regarding this, I advise you to check all of these protocols from here, and you can find there some good investment opportunities. But there's like a quite new protocols and they are also attending the Open League. And if you gonna be one of the participants here, you will be able to share this prize pool.
Yeah. It makes a lot of sense as to why people would want to. So if you guys are planning to learn a bit more on DeFi and you want to explore it, especially on the TON side, because that's what we're trying to expand here, because every single blockchain needs a very good DeFi space and a very good DeFi narrative. You should definitely go into the Open League, explore all of those projects that are building through the Open League, because at the same time as you're learning and as you're gaining experience and gaining knowledge, you'll also gain rewards, which will be airdropped at a later stage when the Open League is finished. It's a very good incentive.
I love what you mentioned before, that there's not only about the money, there's also about the knowledge. And from my years in the industry, I'm in the industry since 2017 as like a player, and since 2019 as a dev. And build a lot of the DeFi tools. When we hire employers and when we educate them what is the crypto and what is the DeFi, I find some kind of formula how to love crypto and how to love DeFi. So first, you need to know the history. You need to know where it came from, because like now there's a lot of famous people around, like Chap and Zhao, or like Sam Bankman-Fried, or like Pavel Durov, or other guys who are now like famous. But before them and before the whole industry, we have such people like Reversed, Shamir, and Adelman, which are invented the RSA algorithm, which is now the base for the whole cryptography of the crypto at all. So we have Brooks, Adam Beck, and we have some technologies like a Merkle tree, for example, or this RSA algorithm, or the timestamping, or the consensus, and all of these technologies was invented even before 2009. It was invented like in 20s and even 1960, 1980, and that's the titans on which shoulders we're building our industry. And there's all the people still alive. They're attending conferences. They're mostly working in cybersecurity, and based on their foundation, we built all of these wallets, all of these chains, and everything else. So even like Satoshi Nakamoto or Vitalik Buterin, they was in the right place, in the right time, with the right tools, with the right technologies, which was invented by people before. And that's a part about the history. The second part is about the feelings and participation. So if you just try on some $10, try to attend some airdrops, try to use some farming, try to play some prediction market, try to buy some meme coin just on the $10. What you need to have here, you need to receive the winning feeling. So if you see like, okay, I'm good, I can, it works, that's will be the part of your love formula with the crypto. And the third part, when you already know a bit history, when you already do some participation, try to find some job in crypto industry. It might help you a lot to understand how it works under the hood, and what's the general idea behind all of that, what's the purpose of creating all of these blockchains and all of these DeFi tools. Because just an example, the DeFi tools on each chain, that's the amazing utilization for the main coin of the chain. That's why we have DeFi on Ethereum, because all of the ETH stake at the DeFi. That's why we have the DeFi on TON, because the TON going to be staked and the DeFi, and that's about the all chains. It's about the Tron, it's about the Binance Smart Chain, it's about the Solana, Arbitrum, Optimism, all of them on DeFi Llama. So that's kind of the formula here. So you need to know the history, you need to participate, you need to receive some feeling, and if you have all of that, if you starting love the industry, try to find some job or be the part of the team who working in crypto, so you're going to have more insights, more information, and more commercial understanding why it's needed, why we have it, what's the benefits. So that's like advice from my side, how to love crypto and the DeFi.
Yeah. I mean, that makes a lot of sense. And especially, I love that you mentioned that crypto and, well, not crypto, but let's say blockchain technology has actually been, well, not technology, but the idea and the concept of blockchain has been around for so many years. Most people don't realize that it was actually created back in the 60s and the 70s. But at the time, they just didn't have the technology to make it work. Right. So it was written up. I can't remember exactly who it was that, of course, first came up with the idea or who wrote the white paper for it, not the white paper, the paper in general. For it. But yeah, when I found that out, I was like, wow, really? Because of course, the only thing that we learn and hear is like, oh yeah, Bitcoin launched 2009. Satoshi Nakamoto was the one who launched it. And you're like, okay, so that's the starting point of blockchain, right? It's not. It goes way back further. And you only get to understand that information by asking questions of other people and of how and why things work. So for instance, if you want to know, yeah, there's DeFi protocols, there is staking, but when I look at it and I look at staking and I'm like, oh wow, it gives me a 4, 5, 10% APR, but why does it give me that percent APR? Like, what is the mechanism behind it that is giving me that? It's technically like, I wouldn't say free money, but it's just like free coins. I'll say like, but why does it work? How does it work? And then when you start asking those questions, you start getting curious, and when you start getting curious, you start loving what you do. And when you start loving what you do, you're just going to get lost in things. And that's exactly how I got lost in crypto and how I started to delve into DeFi, into meme coins, into NFTs, into everything and anything that's crypto. You spoke about like even understanding how the blockchain works exactly, whether it's a dedicated proof of stake type blockchain. I can go on talking forever. I feel like we can do this, but I don't want to be confusing people with a lot more. But my question is, become curious, understand exactly. I wouldn't say exactly, but try to understand how things work and why they work the way they do. And when you start looking at crypto that way, you're going to start learning a lot more, and you're going to start understanding a lot more, and your investments are going to become better too, because you actually understand what you're investing into.
Totally agree with you. Totally agree with you. So let's maybe pick up some questions because we already like 1 hour.
Of course.
All right.
Yeah, that went past really fast, isn't it?
Yeah.
Okay, so I think this person, they said, started with T-Book, it helped, but it's still very basic. It would be great to have trainings like Dauntless Last. We did speak about this. It's difficult to be able to host training sessions like this right now. It's very good, of course. We could host training session every single day. We can delve deep into things, but at the same time, we still have other things to do and other stuff to do as well. So that's one of my suggestions for going online, learning all of this. And as I said, if you ask those questions, type those questions into YouTube, type those questions into Google, use ChatGPT, use anything. You'll be able to find the answers yourself as well. Just become curious. Should we take a look some more? Okay, so a course said I had a question about farming, but it was answered. Thank you for that, Vlad. Okay, so from Echo, is it better to buy crypto on Binance, Revolut, or directly from TON Wallet? What's the difference?
From whatever you want, it depends on your needs. But what I want to mention that the Revolut and the Binance didn't give you. So this is a custody, and you're not owning the crypto. You're owning the account on the Binance, and you're owning the account on the Revolut, and they have all of the private keys and the seed phrases to own the crypto for you. What it means? It means that if somehow, somewhere, something going to happen with the backend, or there's going to be something in the laws there, you might follow the rules. So with the TON wallet, this is a non-custodial wallet, like TON Keeper or like a TON Beta Space inside of the Telegram. You're owning your crypto by yourself. It means you have the seed phrase and you have all of the private keys, and you're fully responsible for your crypto. So wherever you're gonna buy crypto, it doesn't matter where you're gonna store the crypto, and it's better to store crypto in a non-custodial way with the non-custodial providers where you able to have the private keys and the seed phrase.
Yeah, that makes a lot of sense. I mean, if you guys want an example of why at least storing crypto in custodial type wallets is bad, or centralized exchanges, type in Celsius and take a look at what happened with Celsius Exchange a couple of years ago. That's a very good example for you to understand of why a lot of people had a lot of money taken from them, because as soon as you do go on to onto a custodian, you basically sign saying that the tokens that are held, that are yours, are held by them, and at times, especially at extreme times, they may be able to take custody of that to use for different things. So when it comes to actually holding your own tokens and your own things, I would also suggest to take a look into hardware wallets. They're a little bit more difficult to set up, but at the same time, that's probably the best type of protection you can have. Look into Trezor. Don't look into as much as I myself, I have what's the other one that's really, really popular?
Ledger, Trezor.
Yeah, Ledger. I love Ledger and I love Trezor, but I prefer open source code, and especially with what Ledger introduced last year, where they can actually take your seed phrases and give it away. Basically, kind of maybe throw their ledger. Well, I call them ledgers away, right? And I have a Trezor now, and I stick with Trezor personally.
Good point. Good point. Great.
Yeah, well, because at least on the Trezor, as it's open source, you can actually see what they can and can't do with this. Ledger is not open source, and do you know about what the update they introduced last year?
I
About
know
the seed phrases?
it was the update around Ledger, like so the whole concept of the Ledger and the software, this Ledger app, it's closed source. So it means it's not work like a usual DeFi application. So we cannot see what's there under the hood, so we can only trust. Of course, like world trusting Ledger and the people trusting Ledger, but they released an update a year ago where they described like in some cases and somewhere somehow like we're gonna have like it was not a direct explanation.
It wasn't. I think it was half. Yeah.
We're gonna have your seed phrase. It was like the first step for this explanation. So you need to understand the context there. So it might they say like in some cases with some situation we might have this data. That's it. And the people was really scared, and some of the auditory which use Ledger moved to Trezor, moved to open source hardware wallets.
Yeah, because technically, if they want to, if the government comes and asks, well, I would need to have this person's seed phrase for this because I said so, they have to give it. And with that was a very, very massive uproar online for a lot of people, especially in the decentralized side of blockchain technology. Because if you're on the decentralized, you want to have a hardware wallet for, especially if you're staking or if you're doing anything when it comes to. По-русски, yeah, this is an English stream. Sorry, somebody asked a question if you could do the stream in Russian. Maybe next one, we'll see. But yeah, Trezor for me, at least over Ledger. Have a look into hardware wallets and why they're so important. It's like a little private key that's offline, and the only way for you to open and operate the wallet that you have that's connected to that key is through this little USB stick, right? So unless that USB stick is connected and into the computer, nobody can gain access to your wallet except for Ledger. Let's see if there's any more questions. This is quite a long one, but I think it's more of a general question. It said, does TON have an official verification system for developers and apps to ensure users interact with legitimate services? How can the community recognize verified safe bots? So actually, I myself realized this yesterday or a couple of days ago. Telegram itself has a little, if they see that the bot itself is not good or it's a bad player, they put scam next to its name. Have you seen this before?
Yeah, sure. That's that was even before. So also there's like in the whole industry and the whole DeFi space, the only one thing which can help you and which works to identify something is a scam or not, That's unfortunately the centralization. What it means? It means, example, we have all of these white lists in the wallets or the white lists of the tokens on the DEXs. And it means like not everyone able to be in a whitelist. But the same thing, you can create token permissionless and from wherever you want and blah, blah. But if you want to have, if you want to be like a whitelisted on some DEXs or in the wallets, you may do some due diligence with the wallet team or with the DEX team to ensure them like you have a really good product. And unfortunately, that's the part of the centralization. So if we wouldn't have this part, then we like a fully open market, some kind of like a, I don't know, natural space between the islands or between the lands, or the natural space in the space exactly. So wherever like it anything can happen with you. You can earn a lot or you can die. So that's the general idea behind it. And regarding some big infrastructure solutions like a wallet, we have this whitelists for the tokens where we can do the due diligence and understand if the protocol is good or not, and add or not add it into the whitelist. The same for the all wallets in the industry, the same for the all DEXs in the industry. So even like an Ethereum, Binance Smart Chain, whatever, if you go into the DEX and you're trying to buy or sell some new token, you always receive this warning message like this is the new token and everyone can create this new token. This token is not whitelisted, so you're responsible for yourself. In any case, you're responsible for yourself, even if it's whitelisted or not whitelisted. Yeah, but it's the part of that centralization. It's good to have a knowledge and understand what means the good product. So the good product here means first, you fully understand how it works. Second, you understand where's the yield came from, so how they earn on your money, so they're able to pay you this interest and this yield. And you need to go to the docs, you need to understand this. Then it's good product always is open source product, so everyone can have access for the code and understand how it works. Also, the good product have the audits, and in audits there's no critical bugs, or if it was, there's fix it. And that's like a pre-due diligence to understanding. So if we're in the decentralized space, is DeFi trying to give you more access, more freedom, we of course gonna put more responsibility on you, and that's the part of the responsibility which you cannot avoid. I'm sorry.
Yeah, it's the sad truth about decentralization. As you are in charge of your own assets, you are in charge of where you put them at the same time. But when it comes to interacting with decentralized applications, you have to remember this. Everything that's on the blockchain is done through a smart contract, right? Which means that there is code behind it. Now, to be able to view a smart contract for specific things, you have to know how to use different blockchain explorers. So this is something that I've not seen really many people talk about. And this is something that I had to learn the hard way myself when I started trading when it came to crypto and NFTs and anything else, is that you need to understand, because we talk about blockchain saying it's very transparent, you can see what goes where and who's holding what and how, but it's just how do you view this? So each blockchain has an explorer. So if ETH has an ETH Explorer, TON has TON Scan or TON Explorer. You can search it up on the internet right now and take a look. And when you go there, you're able to input wallet addresses. You're able to input smart contract addresses. And when that opens up, you're able to go over to, well, for me, this is the first thing I do at least. You're able to go over to the code. And as soon as I see that the code is not being shown or it's closed by the person who has launched this smart contract, I do not touch it, because you do not know what's inside. And if you don't know what's inside, you do not know what you're investing into. That's just my personal opinion when it comes to investing into decentralized protocols or coins, meme coins, NFTs, anything.
Agreed, totally agreed with you. So I think we already like 1 hour and 10 minutes live. So
Yeah, we are. Yeah.
Let's wrap up.
Yeah, I think it is time for that. I mean, it's been a great stream. It's gone past very, very fast. I enjoy doing these. They're very a lot of fun. We can talk for hours. But yeah, and look, guys, at the end of it, don't forget to do the T-Book quests. I know there were some more questions about T-Book quests, but my suggestion for that is go onto T-Book, take a look at each protocol that's doing that quest. search up each protocol and what it is, and then take a look at what the actual quests are, whether it's providing liquidity, whether it's staking, whether it's actually trading, and then search up what each thing is for you to better understand what you're trying to do. Because I think that was one of the questions that somebody asked just now. But yes, go and get those SBTs from T-Book. Go and start learning DeFi. It's a lot of fun.
Yeah, and check our previous stream about the farming strategies. So there's more information about the T-Book quest and how it works. Helen even did the presentation there. So that's a good way how to start educating yourself and participating, and a good way how to receive a reward. So I think this is it, and thank you so much.
Yeah.
That was really powerful.
Yeah, that was a really, really good stream. Hopefully we can have many more of these. Thank you everyone for joining. It's been a lot of fun. Have a good day.